Welcome to Pressure Points. Our topic is Tim Cook's time in China this week, what it means for Apple's manufacturing ambitions longer term. And just to take a step back, as Cook was in China this week, he met with Chinese officials as part of this, including the Commerce Minister, which is like the person to meet with. This person oversees all of trade that China does with the rest of the world and investment from US into China. So he met with the person, he met with the decision maker, and in that meeting, he committed to increasing spending, increasing investment in China. And so for those of you who have been following the bouncing ball, is that may have a similar rhyme to what he said back on August 6th when Apple increased the amount that they're going to be investing in the US from 500 billion to 600 billion. So it seems that Apple wants to do both, invest more in China and invest more in the US. And what does that mean for kind of a longer term narrative, which has been Apple has been wanting to desperately diversify away from China? And so to break that down, we're going to start at the top is first of all, look at Apple's business overall. And if you look at the 100% of revenue in any given quarter, it can be up to 30% of revenue comes from their services business. So kind of throw that out, and that remaining, call it 70%. It's around 45% of the total revenue is manufactured in China, 10% in India, 10% in Vietnam and Indonesia, Malaysia, and then call it sub 5% in the US. And so China's a big deal when it comes to manufacturing. Of course, that's why Apple was caught up in a lot of this trade uncertainty earlier in the year. And Apple has been wanting to diversify away. India, as I mentioned, is 10%. They've made commitments to increase that as well. The expectation is by the end of this year, it'll be probably 12% of their revenue will be manufactured in India, predominantly around high-end iPhones. And so what does this mean that Apple is increasing their investment in China and still wants to diversify away? And I think the simplest answer is that they are slowing their path to diversification. Now, earlier in the year, I wrote that they have a 3 to 5 year track to get China down to 25%. And part of the reason is for the trade risk, but also there's geopolitical risk. What China eventually will do in Taiwan could impact how Apple can manufacture and get access to that manufacturing base. And so I kind of saw this 3 to 5 year window to get to 25%. Now that's a fast track to go from 45 to 25% over 3 to 5 years. If you even take the 5 year track, that's moving really fast. Based on the comments this week and them increasing investment in China, it's just not going to happen. It's probably more like a 10-year trajectory to get there, 10-year path to get there. I still believe that is ultimately where they want to be, is at 25% made in China, and then the rest in Asia, other parts of Asia, and then still a smattering. I'm going to say still probably 5% of their manufacturing will be done in the US in the next, call it 10 years. I just don't see a big movement there. So this makes sense that they want to continue down this path because China is working for them, not just for the manufacturing, at least in the near term, and they've navigated around these tariffs, but also on the demand side. And if I can just quickly shift to that part of the equation, is that China demand has been in the tank, sub kind of 10% down year over year. It's improved more recently, but the indications are that this next iPhone cycle is doing well in China. The iPhone Air just released, and it was delayed a little bit because it has this virtual SIM. It needed approval from China to have that. And they sold out relatively quickly. It's already a week lead times on iPhone Air in China. And so all indications are, we heard previously a few weeks ago from JD, which is like the Amazon of China. They talked about being sold out of some of the 17 Pro models in a short amount of time a few weeks ago. So things seem to be, the demand equation seems to be going better for Apple in China. And so when you put that kind of improving demand piece, it makes sense that Cook wants to continue to foster strong consumer demand, but also probably slow down a little bit of this ambitious move to diversify away from China manufacturing. Just as a quick note related to the US, and again, this doesn't change what Apple is doing with that 5 to 600 billion commitment that they've made to doing investment in the US. One last piece, I just want to put a postscript in terms of how the iPhone 17 is tracking. And Brian from our team is tracking this on a daily basis. He looks at 8 different countries and the lead times. My experience over time is lead times generally are longer for more successful cycles. You can debate the accuracy of using this method to understand what demand is like, but in general, I found that it has been a helpful tool. And as it's stood a week ago, is that the lead times this year were running about 13% longer than they were last year. And as of today, this recording on Friday, it's about 15% longer. So they've kind of held that 10 to 15% range here since the launch, which I think is a positive sign for demand. That's good. A lot of people are watching these numbers too, and that probably means that some of the whisper numbers are slowly going higher for the September quarter, for potentially the December quarter. And I think that in aggregate, it's just good to have this off to a solid start. So China seems to be improving, but there's also this piece, not very exciting, but very true, is that 2021, they had that monster iPhone revenue growth year, almost 40% revenue growth. And this is a logical time where a lot of those people are coming back and upgrading. So we're seeing that in some of these early numbers, at least from the channel. So overall, continue to believe that Apple is going to perform well into the end of the year based on what I think is going to be increasing investor expectations around what the iPhone 17 cycle looks like in aggregate. On behalf of Pressure Points, I'm Gene. Bye for now.